Welcome to our channel, where we cover anything and everything in the car industry. If you enjoy cars and wanted to stay up to speed on all things automobiles, please like, share, and subscribe to our channel. Tesla investors are facing a new reality after CEO Elon Musk bought Twitter, and competition intensifies from established large manufacturers. Tesla shares have suffered their worst year ever, and 2023 also appears to be a poor year for the company. A year ago, Tesla appeared to be unstoppable, with its shares hovering near an all-time high and rising optimism for the growth of the global market for electric vehicles. Now investors are having a hard time seeing a bottom in the market. Given the stock's history of extreme volatility and the unpredictable nature of Elon Musk, the company's chief executive, the stock was never recommended for investors who lack courage. It has lost more than 60% through Tuesday's closing, putting it on track for a record yearly fall and destroying almost $626 billion of shareholder wealth in the process. Despite this, the extent of this year's crash is startling. Following Tesla's inclusion in the S&P 500 index for a period of 2 years, investors are now faced with a different reality. The overwhelming market share held by Tesla is coming under increasing pressure as established mainstream manufacturers step up their competition. In addition, analysts don't see much on the horizon that may rekindle the kind of insatiable demand for the shares that was prevalent in 2020. Meanwhile, the company is trading at a level that is around 40% lower than when it first entered the benchmark. According to Jeffrey Osborne, an analyst at Cowen & Company who has the equivalent of a hold recommendation on the company, and has stated that this whole narrative about Tesla being a leader in everything they do is dimming. Tesla's status as a leader in their various endeavors is declining. Tesla shares tend to operate best when you can generate a frenzied narrative about something coming, Tesla CEO Elon Musk said in a statement. It is not apparent what there is to look forward to in the new year. Delays in software and battery technology. According to the analyst's observations, Tesla's highly anticipated driving software as well as its battery technologies are both falling short of their respective timetables. However, due to the futuristic style of its Cybertruck, it may be difficult to market it as a vehicle for the general public. Requests for comments emailed to Tesla were not answered by the company. Given the free fall of the stock, more modest profit projections, and the overall reset in valuations of growing businesses, analysts have been scurrying to rethink their prognosis in light of these factors. The average price objective that investors on Wall Street have set for Tesla's stock has fallen to its lowest point in more than a year. Evercore ISI and Mizuho Securities were the latest to reduce their estimates, which resulted in the stock dropping by 8.1% on Tuesday to a price of $137.80, which is its lowest point since November 2020. On Wednesday, it fell to a low of $136.03, which is the price at which the stock was trading when the S&P Dow Jones Indices made the announcement in November 2020 that the firm would be included in the S&P 500 index. This was a momentary fall on Wednesday, although it is a far cry from the record closing price of $409.97 that was reached in November of last year. The average analyst target of approximately $259 implies a roughly 90% gain over the next 12 months from Tuesday's closing price, which suggests that there may be room for that gap to narrow. The record closing price was reached in November of last year. Stunning reversal. A year ago, Tesla was valued at almost $1 trillion. Earnings were constantly outperforming expectations, and demand for electric vehicles seemed prepared to grow as more countries announced green energy plans. This year, however, Tesla has experienced a startling reversal of fortune. Investors are projecting a phenomenal increase in revenue numbers along with an expansion in manufacturing capacity, said Bruce Kahn, a portfolio manager at Shelton Capital Management, which held approximately 236,000 Tesla shares as of the end of September. Investors are projecting a phenomenal increase in revenue numbers along with an expansion in manufacturing capacity, he added. It is anticipated that sales could increase to 3 million automobiles from 1 million automobiles, but the truth is, not yet. Naturally, the market for technology shares as a whole has been hit hard as a result of the Federal Reserve's decision to raise interest rates in order to curb inflation. which has stoked fears of an impending economic downturn. But Tesla shares have been among the worst performers recently, in part because investors are concerned that a recession may reduce the market for expensive electric automobiles. Among the 10 companies that make up the NYSE FANG index, only Meta Platforms has reported a more significant drop. The situation became much worse as a result of Musk's purchase of Twitter, since there was growing fear that his interest with the social media platform was diverting his attention away from Tesla. Additionally, he contributed to the financing of the transaction by selling a portion of his shares. However, in terms of valuation, Tesla remains the 4th most expensive stock on the NYSE FANG index. The company's stock is currently trading at a forward multiple of 33 times the expected earnings for the year 2022, worth $440 billion. The value of the corporation is close to $440 billion, making it far more valuable than any other major automaker in the world. The worth of Toyota, the company that comes in second place, is around half of that. According to data published by Bloomberg, Toyota is projected to sell 8.9 million automobiles in the fiscal year 2023, which will finish on March 31st. Meanwhile, Tesla is forecast to deliver approximately 1.3 million vehicles during the calendar year 2022. Although it's true that bulls point to Tesla's far higher margins, Tesla is still trading like a tech business, as a high-growth company, said Shelton Kahn. Other vehicle manufacturers are not, he added. Tesla is unique in that regard. People believe that the electric vehicle industry will expand dramatically in the coming years, and they anticipate that Tesla will be one of the leading participants in this industry. All of this, some people believe, indicates that there is further potential for the stock to decline. Tesla is obviously not benefiting from the force of momentum. No event in 2022 has been successful in lifting the price of the shares for an extended period of time. This includes the decision to split the stock and the dangling of the potential of a share buyback. Even the Musk Twitter poll about stepping aside from his position as CEO of that firm was unable to stop the company's downward spiral. His subsequent declaration on Tuesday that he will, in fact, retire from the job has not resulted in any large relief rally being organized. Investors at Tesla, many of whom view Musk's ability to steer the company towards success as constituting the basis for the company's potential, are currently facing a moment of reckoning. This helps to explain, at least in part, why Tesla's share price has dropped so significantly in a year when earnings are projected to increase by more than 80% and revenue is projected to increase by nearly 55%. Robert Shine, Chief Investment Officer at BANKRUPTCY Wealth Management, which holds Tesla shares, claimed that from a brand viewpoint, Elon Musk is Tesla and Tesla is Elon Musk. BANKRUPTCY Wealth Management is a shareholder in Tesla. The more Elon uses Twitter in a political manner, the more the Tesla brand's reputation could be damaged as a result of Musk's actions. Because Shine anticipates that the firm will become an industry leader in the long run, he is holding off on purchasing additional shares of the company's stock until it drops even further. He stated that if Tesla fell by 15% to 20% from its current price, the company would be an investment for the company. Please like, share, and subscribe if you enjoyed this video and would like to see more.